Welcome back to another Chart Nerd technical analysis video, guys. Today we will be covering Fantom. The ticker is FTM against USDT on the weekly time frame. Before I start, this video is not financial advice and is all for educational and entertainment purposes only. If you do enjoy the content, please do give it a thumbs up, a comment, and maybe even a subscribe if I'm lucky. Diving into Fantom here, quick breakdown of past cycle history. So from 2019 here, back in inception in June 2019, we had this just shy of a year, around 96% correction. Now keep that number in mind, 96%, that lowballed out in March 2020, and at this point we saw Fantom go on to do a whopping 200,000% move, absolutely insane gains. And from this low we had a macro motive Elliott wave theory 5-wave move play out. So one large wave move that has waves in it, counterpart waves. So we had this, from this low we had this wave 1, we had a wave 2 correction, a macro wave 3, the largest wave in this move, a wave 4 pullback, and then the last explosive blow off top for the wave 5. Now this was a massive 5-wave move, and this indicated, or has indicated in the data here, that this was the macro bull run for Fantom from that previous cycle. So it had a 96 bear market correction and then a 200,000% impulsive 5-wave Elliott wave move up. Now from this high, what happened here got very interesting. So we formed this level of resistance, this descending level of resistance that I wanted to keep in mind as well. So you can see that from this second attempt where we put just a slightly lower high here in than the all-time high, we started rejecting, and this was a key level of resistance moving forward. And it wasn't until of October of 2023 that we actually broke that. I'll get into that in a second. But inside all of this sort of bear market correction, from this bull market high, the correction was actually a 95% move. So very similar to this corrective move here, we've just had a longer, more drawn out, extensive bear market, and the lows were actually put in for Fantom back here in November 2022. So isn't it ironic that it took a year, so just under a year, from June 2019 to March, so just shy of a year, to correct 95%. And if we look here from this all-time high to where we lowballed out here, it took just over a year. So again, it has been more drawn out, and because we've had an accumulative range that we are actually breaking above and holding at the moment, we've had this sort of range from this low ball here in 2022 where we've just sort of gone sideways and accumulated under this level of resistance here. And as I said, in October 2023, it's where we broke it, and right now we are above this key level of resistance and holding it as support, looking for continuation. So again, I will get into that in a second, but giving this breakdown, we have run into a key level of resistance here, which we've pulled back to this level of support. So this level of resistance, which we've been recently rejected from, is no surprise, because if we backtrack back to this all-time high, what you'll see is all we ran up to is this previous level of support. So we had this support here back in 2021 into 2022, and we lost that support of around $1.20, and since have retraced, broken out of descending resistance, and have retraced back up to this key level of previous support that is now acting as resistance. So it's, at the moment, I think we're kind of caught between a rock and a hard place, and Fantom's trying to make its mind up what it wants to do here. And just to break down this top pattern here, we had a double top play out at this wave 5 where the all-time high was put in, because we had an M top pattern. I'll get that on actually. So we had this wave 5 blow off top, came back for support at $1.20, put in a lower high, which created this descending resistance here, and we came back, failed to put in another higher high, and we just kept putting in lower highs. And over time, this indicated depleting buying pressure. We lost this $1.20 support, and right now we've worked our way back up to it and met it as resistance. So it's a key area of resistance that we need to break above. $1 is around the $1.20 mark is key resistance, and right now key support sits at 64 cents. So we're literally range bound at the moment, trying to make our minds up on what to do. Now, given this breakdown from this all-time high, I think we had this wave 1, wave 2, wave 3, wave 4, wave 5 correction, and then we had another 5-wave correction from this level of resistance that we've broken out of 1, 2, 3, 4, 5. And what this has sort of given us is some sort of double bottom in this accumulation range where we came up to ascending resistance, came back, and we've just bounced off of this level of support, and it equally ties up with this wave 4 low back here as well. So very, very interesting. We've had 3 points of contact on this 16 cent range down here, which has been the sort of accumulation low for Fantom, and now we've got back above the key level of resistance and are holding it as support, as I was saying. So a massive macro 5 wave. We had a corrective 5 wave move up into resistance, which created this descending resistance, then had a 5 wave correction, which formed this double bottom. And right now we've broken out of the double bottom and are back testing it for support. Things look really healthy. Things look really, really healthy. And as long as we sort of hold previous high here and sort of accumulate on this range high, I will drag this across actually because there is some confluence. Yeah, this is a key sort of range that we've broken out of right now, and we are back testing as support. So as long as we can hold this as support, and this last few weeks where we've been holding, and we can react and take out this sort of $1.20, we have to take this level of resistance out. I'm going to show you why it's so strong right now as well. So getting this box off, if we go from the current local low of this cycle retracing to the all-time high, there's no wonder again why we've run up to it as resistance, because we're meeting it at the 0.618, which is the golden ratio. And again, just dragging this across here, you can see all of this previous support that we've now just ran into as resistance, and we're sort of coiling up between the 0.618 and the 0.50 here, and back above this previous high right here that we put in February 2023. We're holding this high as support, but stuck between this resistance. So it's a very crucial moment in the charts. It's sticking out like a sore thumb that right now it needs to make its mind up. If we do start to see ourselves get back above $1, I think we have another target ahead of us, and what we could be in right now from this low here is a wave 1, a wave 2, a wave 3, a wave 4, and right now we're looking for this final sort of wave, and I think it sits between $1.70 to $2, $1.70 to $2. And how I got that is by getting another fib on from this. You see how I said wave 1, wave 2, wave 3, wave 4, from this wave 4 low back up to this high here at $1.20, which we're meeting as resistance. If we tackle out of that $1.20, then you can see the 1618 sits at $2 and the 1272 sits at $1.50. So these would be my targets. If we start to see Fantom coming up here and tackling out of this local high at $1.20, then minimum $1.50 to $2, and what you've got is a 1, 2, 3, 4, 5, which could be, if we zoom out from these bear market lows, this could be your macro wave 1, and then you come in for a large wave 2 before looking to tackle out of this all-time high. And the targets for me, if Fantom does do that, I think at a minimum is looking to push towards $23, because once the all-time high does get taken out, the minimum target for me on this next impulsive move would be $8. And at that point, if we came back and held the 1 fib, then yeah, $23 for me from this local low and this accumulation range, and taking out this all-time high. Minimum $8.16, sorry, but I do believe Fantom could get to the 23 and potentially even to the 2 fib at 76. When this thing moves, it moves. I'm not being funny, it can move. So we've just had a 95% bear market correction, very similar to what we had back in 2019. Had this 5-wave impulsive move. Right now we've corrected, formed a double bottom. We're under key resistance, but breaking above this range. So we have to tackle out of $1.20. We have to. What if we don't? In the near short term, what if we don't and there is more downside? We have to look at both situations here, right? Well, for me, on the macro scale of things, some people don't like using this as guidance, but for me, we've got this low in 2020, and now we've also got this bear market low in 2023 of October. So if we was to fail to take out this $1.20 high and put in a lower high right now, quite simply look for this ascending trend line of support in the next coming weeks to months. Because this could be an A wave we've just gone through. Right now we're having B wave relief into resistance and then looking for a final leg down. And this could tie up. If we look to this high here, we could just hold around support around 60 cents. So I think holding 60 to 50 cents is so crucial right now if we do see a pullback. And at that point, if we do come to some sort of crossroads around here in July, August sort of times, then look for the takeout, then that could be the move as well. So it's all about taking out this local high here at $1.20, that golden ratio on the way up to this all-time high from this low. It's literally all about taking it out. And as I said, if it doesn't and we fail to take out this local high, do look for coming back to support on this previous local high and getting a good entry point in if you haven't got your bags up already, because this would be previous multi-year resistance that you're looking to now literally comfortably turn into support. And what we could have had already is a wave 1, and we've topped out already. Now we're coming for an A, B, C, wave 2, and then looking for your wave 3. So not putting in this final 5th wave I was talking about earlier to $2, but instead, if we fail to take $1.20, pulling back in an ABC, back to crucial support, and then going for the next wave up where you've got a wave 1, a wave 2, and the wave 3, which potentially takes out this all-time high and going on to those $8 and $23 targets I was speaking of before. Now, before I go, a little bit more confluence to us right now is the fact that if I get the 20 and 55 EMA on the chart here on the weekly, we printed a bull cross back here in August 2020 where we broke above the EMAs, back tested them for support and didn't look back. Right now, if we fast forward from this bear market, we've on the weekly got a second bullish cross where we broke above the EMAs, back tested them for support, and since then we're holding them again and haven't looked back. So are we literally in a rinse repeat situation to somewhere around this scenario here where we're holding the EMAs looking for the next explosive move up? You tell me, guys. It's that $1.20 we're looking to break, but this little indicator here, this backtest of support on the golden cross and holding these EMAs is what you want to see in an uptrend. When you're above the EMAs in price and holding them, you're bullish. When you're underneath these EMAs and you're hitting your heads on them, you're bearish. Okay, so above the EMAs is a good sign, below the EMAs is a bad sign. I will dive into another EMA technical analysis video shortly, but I just wanted to point out that, yeah, we've got a bullish cross. The last time we had a bullish cross here, look at the moves that came and look at the moves that potentially could come now up to those $23 targets. So there's another confluence point for you guys. So I hope you enjoyed the video from Chart Nerd TA, guys. Take care. Peace out.